Hello traders and welcome back to another video of Nova Forex. If you are among those who are not able to identify and plot the supply and demand zones on the chart of the market properly, then this video is for you. So, in this video we would reveal the best strategy that you can use along with the supply and demand zone, which would help you in making huge profits into the market. Now before we move on into our video, make sure that you subscribe to our channel and hit this bell icon to never miss out any of our upcoming videos. Now let us first understand about the basics of supply and demand zone. We need to learn all these four concepts before we move on into the best strategy of the supply and demand zones on the chart. So, let us begin with the first concept, which is support and resistance levels. So, what is a support zone? The support zone are those zones at which the buyers of the market would initiate their buy trades. And hence, due to this, the market would go upside, which is why we can say that this zone provided a support to the price. Let us see an example of a support zone forming into the market. So, here we have the Euro-Japanese Yen chart on 1 hour time frame. We can see market going above from this zone for 2 times. And thus, we can say this is a support zone as the buyers activated their buy orders into the market when it reached at this zone. Similarly, resistance zone are those zones at which the sellers of the market initiate their short trade into the market. This would lead to market going downside, which is why we can say that this zone has provided a resistance to the price. Let us see an example of the resistance zone forming into the market. Here we have the Euro-New Zealand dollar chart on 4 hour time frame. We can see market going downside after reaching at this zone for 2 times. And thus, we can call this zone as a resistance zone. And now when the price would reach at this zone for the 3rd time, the sellers of the market would initiate their short position into the market. The support and resistance levels are created by the smart money in order to fulfill their pending orders into the market. And also, when the market makes such big bullish candles with little wicks or no wicks at the support zone, then we can say that this is a strong support zone. Similarly, when the market makes big bearish candles like this at the resistance zone, then we can say that this is a strong resistance zone. Now let us move to the another concept that we need to learn, which is what are supply and demand zones. So, the supply zone simply means the zones at which the sellers of the market have set their sell limit order. Let us learn about the supply zone with an example. So, as you can see here that the market made this big bearish candle which caused inefficiency, and thus, we would draw the supply zone from its previous candles. And then we can see that the price again reached at this zone and went downwards as the sellers of the market have set their sell limit order at this zone. When the market creates big red candles like this, it indicates that this is a strong supply zone as a lot of sellers took a short position at this point, which is why the market created this big red candle. Similarly, the demand zones are simply those zones at which a lot of buyers have set their buy limit orders. Let us see an example of the demand zone. So, here we can see market making this inefficient candle, which is why we would draw the demand zone from its previous candle. And as we can see that the price went upwards after reaching to this demand zone. And also we can see market creating this big bullish candles, which indicates that there was a heavy buying by the smart money at this point, and thus, we can call it as a strong demand zone. Now let us learn the third concept, which is market patterns for demand and supply zone. So, the supply and demand zones can be only plotted into the market when the market makes these 4 types of patterns. The first 2 patterns are for the supply zone and the another 2 patterns are for the demand zone. Let us learn about all these market patterns in detail. So, the first pattern of supply zone is rally base drop. Let us learn about this pattern through an example. Here we have the Euro-Pound chart on 1 hour time frame. We can see market making higher highs and higher lows, which indicates that the market is in an uptrend. And then we see market breaking this higher low to the downside, which indicates that the market may reverse from this point. And thus, we draw the supply zone from the area of base. After that, we will wait for the market to reach again at this zone by making a rally, then a base, and then again drops. This pattern works at the time of reversals only. Now let us see the second pattern of supply zone, which is drop, base, and drop. Here we have the Euro-Canadian dollar chart on 1 hour time frame. We can see market doing the break of structure to the downside, which indicates that the market is in a downtrend. So, in this market pattern, the market firstly makes a drop, then it creates a base, and then again it drops. So, here we would draw the supply zone from the base. And then let us wait for the market to reach at this zone. And as you can see here that the market made a small pullback to reach at this zone, and then it made a drop. This type of pattern works in the continuation phase. Now let us see the market patterns for the demand zone. So, the market patterns at the time of demand zone are drop, base, rally, and rally, base, rally. In the first pattern, which is drop, base, rally, the market is in a downtrend first, and then it makes a change of character by breaking its lower high to the upside. And thus, we would plot the demand zone from the base. And as you can see that the market went upwards after reaching to this demand zone. Similarly, in the second pattern, which is rally, base, rally, the market first makes a rally, then it creates a base. After that, we draw the demand zone from this base. And as you can see that the market made a rally again after reaching to this demand zone. Now let us move to the fourth concept, which is strength of supply and demand zone. As we all know that the smart money creates the supply and demand zones into the market in order to fulfill their pending orders into the market, but the smart money does not create supply and demand zones every time. And this is why we should check the strength of the supply and demand zones, as sometimes it may look like a supply or a demand zone, but the market does not respect it. So, how do we identify the strength of the supply and demand zones? We can do this by analyzing the candles that are being formed at the time of creation of supply and demand zones. Let us learn about this with an example. So, here we have the Euro-Pound chart on 1 hour time frame. We can see market doing the break of structure to the upside, which indicates that the market is in an uptrend. We can see that the market made a rally first, and then it created a base. And thus, we would draw the demand zone from the base. And after that, we can see that the market created these big bullish candles, which indicates that a lot of traders were interested to buy at this point. And thus, they would bring the price again at this point or zone in order to initiate their pending orders into the market. And also, we can say that this is a strong demand zone. Now let us see some of the examples of weak or low strength demand zone. Here we have the pound US dollar chart on 1 hour time frame. So, as you can see here that the market made a rally and then it created a base. And after the base, the market made only one bullish big candle, and then it made small candles, which is why this is a weak or low strength demand zone. Let us see what happens if we would have drawn the demand zone from this base. So, as you can see here that the market did not respect this demand zone as it went below the demand zone. And also, if the market makes a lot of small candles at the time of base, then also, we can say that this is a weak demand zone, as there are very little chances of market respecting this type of zone. Now that we have understood the four basic concepts, let us learn the strategy of the supply and demand zones. So, in this strategy we would use the top-down analysis along with the supply and demand zones. Let us learn this strategy with an example. Here we have the USD yen chart on 1 hour time frame. So, as you can see here that the market is doing the break of structure to the upside, which indicates that the market is in an uptrend. And then we see market making a base after a rally, and thus, we would plot the demand zone from the candles that are formed at the base. Now here is a catch. The correct way of demand zone is to plot it from lower wick of the candle that made a low in the base to the body of the candle that made a high into the base. And also we can see market making big bullish candles which moved the price above in a very small time, and thus, we can say that this is a strong demand zone. Now let us wait for the market to reach at this zone. We can see market making a liquidity zone of equal lows, and then it swept it to downside in order to reach at this demand zone. We can see that the market has reached to the demand zone. And thus, we would switch over to the lower time frame, which is 15 minutes time frame in this example. And as you can see here that the market is going upwards after reaching to this zone. And thus, we would wait for the market to go above from these level in order to get the change of character confirmation. And also, we can see market creating this big bullish candles after the creation of demand zone, and thus, we can say that it is a strong demand zone. And then, we can see that these bullish candles broke this lower high to the upside, and thus, it made a change of character. Now we would plot the demand zone from the base and then wait for the market to reach at the demand zone in order to initiate our buy trade into the market. We can see market reaching to the demand zone, and thus, we would initiate our buy trade into the market from this point. We would keep our stop loss below this demand zone and place our targets at 3:1 risk to reward ratio. And as you can see that we made a nice profits through this strategy. Now let us understand that why did we use the top-down analysis in this strategy. So, the reason behind this is that if we have taken entry on the higher time frame, then we would have been late in taking the entry. This brings us to the end of this video. So, in this video we shared the best strategy of the supply and demand zones that would help you in maximizing your profits into the market. Now before we end the video, make sure to subscribe our channel and hit this bell icon to never miss out any of our upcoming videos.